Hi, welcome to Bottom Line Results. My name is Lenny Nuccio, and I'm here today with Norman Tamang with Providence Capital. And thanks for coming with us today, Norman.
No problem.
Just had a few questions about some alternates to bank loans. A lot of business owners, sometimes they don't know what other options might be out there, and so wanted to share some of your expertise with us.
Sure.
You typically hear from business owners when you first speak to them about, say, a different type of financing that they may be familiar with.
Sure. Contingent upon the business owner, a lot of people are a little old-fashioned and they work with their typical bankers and they won't go anywhere else except the initial banker that they built the initial rapport with. But they aren't usually too optimistic about other alternate finance options.
Sure.
But once we explain the benefit of saving your bank lines or other financing options available,
Sure.
they're more than open-minded about exploring that option as well.
So they seem pretty open then?
Yeah, absolutely, absolutely. I mean, 9 times out of 10, everyone just refers back to the initial banker they worked with to get an SBA loan or whatnot, or startup capital. But there are other sources of finance options to get equipment and working capital and whatnot.
Awesome. And what kinds of business would you say, Norm, that take care of this type of financing?
From A to Z. I mean, your local grocery store can take advantage of this. Dentists, doctors, law firms, construction companies, restaurants, A to Z. Any type of business at this point.
That's fabulous.
Absolutely.
Do you find many entrepreneurs and other professionals may not have realized that there are other options, for some of their financing needs?
Again, half the time they're just really working with their initial banker that they initially started their business with. But once they find that there's other options, or for example, there are instances where banks don't give them a second loan or a third loan or a fourth loan down the road, then they start exploring other options as far as financing needs for equipment and whatnot.
So even if they have those relationships and maybe some funding already from their local bank, you still may be able to help them with some other options?
Absolutely, absolutely.
Well, that's great. What kinds of programs would you have, Norman, that you could suggest to a business owner or entrepreneur that they might be able to utilize financing for to help them grow their business?
For example, in the dental industry, there's always new technology coming on, whether it's X-rays, dental chairs. They got to keep up with competition, upgrade that equipment, and compete with competition.
So this could really give an individual professional or business owner an edge over their competition.
Absolutely, absolutely. By upgrading their technology and keeping up with today's market, by all means, they're more than equipped to compete with the neighbor next door and whatnot.
Okay. How would this impact their cash flow, Norm? If someone were to use some of the different options that you know about, are there ways that they may be able to protect some of their cash?
Sure. As we all know, cash is king. There's nothing better than having cash in the bank, and instead of front loading and paying 100% of the cost of new equipment, why not streamline it to cater towards your cash flow and make a monthly payment and be able to get 100% tax write-off on that equipment?
Even tax advantages.
Absolutely, absolutely.
Great. Now you work with some leasing, don't you, for companies where they may be able to lease some of their equipment?
Yes, yes.
How does that work?
Well, for leasing, what would happen is they would, versus compared to going to a bank and getting a bank loan and just paying for equipment cash, they would be able to get a loan through us, write it off as a capital lease, and be able to write off 100% of the payment. Whereas to a bank, if you were to use a loan, you'd only be able to write off the interest on the loan taken for the equipment.
Well, that's quite an advantage then.
Sure, sure. 100% write-off is great.
And how difficult is the process for something like that?
It's very simple. All we take is a one-page application and figure out the client profile, get some information from the company, and at that point in time, just get a proposal out and go from there as far as the equipment that they're buying.
Sounds very simple.
Very streamlined, yes.
Now, what happens, I know that many times if, say, a company needs to buy more computer equipment or even software, it can be outrageously expensive.
Sure.
And then they say, maybe I can swing it for the purchase or the lease, but then I don't have enough because I need to train my whole staff how to use it.
Absolutely, and that is a normal scenario. We here at Providence Capital, we do cover up to about 20% soft costs, and soft costs is the verbiage that we use to cover certain things as build-out costs, training, delivery, installation, and all that good stuff that we would cover, and we have up to about 20-25% at times to cover the soft costs in that case.
Wow. So it's even when you buy furniture for your home, you might buy the furniture that's like, well, how am I going to get it home?
Exactly. So we would pay for the delivery and the installation of the furniture.
Wow, that's fantastic. A lot of businesses we know, maybe some huge landscaping firms out there, they may have seasonal fluctuations.
Sure.
in their business. Do you know of any programs that can help someone with that, where they may be flying high in summer or winter? And then
That's a great question. And for example, we deal with clients probably, let's just say Colorado, and we're from December to February. It's just most businesses are shut down. It's just the snow, and nobody's doing anything. We would have a catered finance program for clients out in, for example, Colorado, where they're not in business from December to February, where we would give bulk payments from March all the way up to November, and from December to February, where the slow time would be, is just require a minimum touch payment of about $50 or $100, just to cater to their cash flow needs and whatnot, and acquiring equipment.
Most businesses could handle $50 to $100.
Absolutely, I'd hope so. I'd hope so.
Now, how about those companies that may need some type of heavy equipment, or even medical facilities that may need medical equipment? Certainly not cheap.
Sure.
Do you have no programs that can help?
We have tons of programs, and depending on the industry, we have catered finance programs for each individual niche market. For example, we have special programs for hardware, software only. We have the seasonal payments for constructional equipment or yellow iron equipment, and that sort of deal.
Right. And how much money can someone apply for, Norm? Would it depend on the type of project they're looking to do?
Really, Linda, there is no cap to what dollar amount they request. Our application only product, which means no financials involved, and it's just your approval is contingent upon how well you score out in the business credit. That goes up to $100,000. Now, anything more than $100,000, again, at that point in time, we would require a financial package, a couple tax returns, and to figure out the cash flow at that point.
And then there's really no reasonable ceiling?
There's no reasonable ceiling. Everything would be, at that point, would be contingent upon how well they cash flow and what they can afford.
Okay, and with some of these other programs, Norm, is there a lot of paperwork?
Not at all.
So pretty much within 1 to maybe a few more pages?
Sure. I mean, upon the application process, up to the application only process, the 100,000 would only require a half-page application.
Half-page.
The only paperwork, the only strenuous paperwork would probably be getting your CPA involved and getting the financial package if you needed to any amount that exceeded 100 grand.
More than reasonable.
Sure.
Now, what happens if someone maybe they're already financing, some type of equipment? They may still have a $75,000 or $100,000 balance, and now their business started growing because of that, and they need more equipment or a more modern piece of equipment. What happens in that case if they still have a balance they're carrying with someone?
We offer programs called a wrap lease. We would take the existing payoff and just wrap it into the new purchase, and just combine everything at that point.
Sounds pretty simple.
Pretty easy, yeah.
Okay, appreciate your help today, Norm.
Absolutely.
All right. And if you have any more questions, please give us a call at 949-788-2998, or check out our website at www.bottomlineresultscorp.com. Thank you.